Steve, the market seems to be having a love affair with social media stocks. Facebook's coming public soon. Where should investors be placing their bets?
Well, Matt, the whole social media space is pretty hot today. We're seeing big gains at the open. Groupon is up big because it reported earnings yesterday that were better than expected. But LinkedIn, Zynga, Pandora, any of these sort of Web 2.0 companies, they're all flying. But Facebook is the granddaddy of them all, as we know. There's certainly a frenzy around it. There was some speculation about whether or not the offering was getting the type of demand that people expected. News out this morning, they have a new S1 out. They raised the range to $34 to $38 a share. Clearly, they're getting enough demand to feel they have to raise that range. The difficulty here is that for most retail investors, they're not going to have the opportunity to buy it at $34 to $38 a share, because the second it starts trading, that first trade is going to be well above that, unless something truly bizarre happens here. So what investors really need to do is evaluate why they want to buy Facebook. Do they want it just because they want to be involved, or they think there's a serious growth business here that they'll be able to ride much higher in the future?
So the big question is, will the attention on Facebook take the limelight off JPMorgan, which, as everybody's been reading, has been the focus of a lot of negative attention?
I certainly don't think that's going to be the case. JPMorgan had this $2 billion trading blunder. Not something that's really going to hammer their bottom line if it doesn't get bigger, but certainly something that's focused intense scrutiny on Jamie Dimon, the CEO. Heads have rolled at the chief investment office. Ina Drew, one of the highest-ranking female executives on Wall Street, has now retired from that unit, and a number of other executives have departed. I don't think Facebook's IPO is going to take the attention off JPMorgan, although I'm sure the folks over there would love it if it did. That's a story that's going to continue to play out as regulation continues to be put in, as this debate over the Volcker rule continues. I don't think JPMorgan can hope for Facebook to be the star that sort of takes everybody's attention and pushes everything else under the rug.
If Facebook has a great opening and aftermarket performance, does that mean that investors should be bullish on the market for the coming months?
The simple answer is we hope so. But what's going on in Europe and the political turmoil over there, particularly in Greece, where they seem to be on the brink of leaving the euro, as that situation continues to be an issue, and if the Fed doesn't come in with more easing, which we don't know if they will, this market is still going to be under pressure, and it certainly seems like even if Facebook has a tremendous start to their trading history, I don't think we're going to have a market that is predisposed to the upside. I think the bigger risk is still on the downside here.